So importance of risk management, you help us avoid blowing your account, so you fix what you are ready to lose and not eventually not everything in your account. So in case the trade goes against you, it's going to protect you from blowing your account. That's one of the main important reasons of risk management. And then keeps your emotions in check. Once you are trading with risk management, your emotions are going to almost be in check, or you face little emotions compared to when you don't trade with risk management. Because you might have, let me say, $1,000 in your account and you're not ready to lose that $1,000. And if you take a trade without risk management, that is without stop loss, and the market end up going against you, you will discover that you will now be very, very tensed, or you'll be feeling bad, losing all your account on one single trade. So trading without risk management actually fucks up your emotions. And then trading with risk management keep your emotions in check. Because if you are ready to lose $50 and the market is going to give you a stop loss, you will not really, it's not really going to affect your emotions, because that's just, it might be 1% of what you have, or just a fraction of what you have. So you are still able to trade and all of that. So it's going to keep your emotions in check, So it helps you survive drawdowns. So if you are not trading, if you don't trade with risk management and you enter the market, let me say you buy here and the market is to drop, let me say this is the 61.8 and this is the 70%, and you buy at the 61.8. If you did not trade with risk management and the market is to get to the 70%, you'll discover that your account might not be able to sustain this little bit of drawdown. It's going to blow your account. So when you're trading with risk management, it helps you survive drawdowns. Drawdowns like this, it helps you survive them. Survive them meaning the market will put in a little bit of drawdown before it goes to your profit. But then if you are not trading with risk management, that is, you use a high lot size, you discover that maybe at this point you are already liquidated, your account is already blown, and only for the market to test its original level and allow for long-term consistency. So risk management also allows for long-term consistency. That is, if you have $1,000 in your account, risk management is going to help you be able to trade or split that $1,000 over a long period of time, because maybe a single day might not be a winning day, and if you are not trading risk management, you might blow all your account on that single day, and at the end of the day, you will not be able to continue trading because you don't have an account. So risk management allows for consistency. That is, it gives you the advantage to be consistent, trade over a long period of time without actually being kicked out of the market.